get into today's lesson, how to read past chart history. To me, super duper crucial and huge when you're trying to study a place, support area, resistance areas, exactly how you're going to read the chart. You know, how you're going to read that chart is most likely what it's going to do today. When you kind of go back and look at it, of course, you're always going to look at the day's chart itself, the intraday, but you want to go back and look at what it did over 6 months, over a year. Maybe a year's out of range anymore. Maybe you have to go back to 3 years to really start finding some resistance areas because it's went through what it's went over the last year. Let's break it down. How to read past chart history and different setups and where to find them. Now, just immediately, where, you know, I see this chart, you know, say I pull up a chart like this. The first thing I'm looking at, and again, team, I'm always going back a full year. You know, I'm going back a full year. Go back a full year. You can go back 6 months if you want to. I like going back a full year. As you can see, this is last early May to the May to May. A full year gives you a full range of what's most likely, you know, going to happen with the stock, where it's moved, has it spiked, when it spiked, what's it done when it spiked. All can get that usually in a clear grasp of a year. In my opinion, most 9 times, 9 times out of 10. And again, then you're noticing these things right off the bat. Okay, I know it's got this potential up to this area. See a lot of resistance right here. Boom, 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 boom. You know, that's where my kind of the mouse or my crosshairs were set in there at Thinkorswim. You know, because today here's the day. You know, I'm at today, so I'm looking at, you know, I'm going back and looking at all of this. What do we got to work with? Who are you? You know, Cap R. I'm trying to get to know, you know, like a doctor reading your chart, right? It's essentially what you're doing. You want to make yourself a little special? Just imagine you got it's right, you know, in front of your name. G-Stock, Greatest Shorter, Ringer, Damien. Just put a doctor in front of that. You're just reading the chart. You know, right? You're a doctor. I'm like, come here, CAPR. Oh, look at you. Look at your past. Oh, wow. Oh, that was not pretty. But again, you're using that. You're going back and using, again, sometimes it could be more than a year. You're just a little easier to read right here. I could have showed you something. Oh, so you have to go back to 2 years or 3 years. 1 year is about as max, so you can really get a time, really get a good, I should say, concept grasp of what you're dealing with, right? At least me doing my little session right here, my study. For you guys, you know, for 3 years, it just gets a little, it's really hard to see. But the main thing, again, you're taken away from this. You're spiking on this day right here. You know now you're above a bunch of area that you knew would be resistance. So you know that's a good thing. If we do move down to it, could be a good bounce or support. You know, if you do, you know, get into the $5 area, we see some resistance. We see more right here at 6. You know, and keep up. Like even that, it wouldn't. To me, I would see again. This wouldn't be 7. I'd be like, okay, this is 730, whatever that ended up being, 730 resistance, so on and so forth. 885. You know, of course, that's the 875 rule, but essentially, okay, that's a max 875 area is going to be tough. You're using that. You're looking at it. You know, of course, I'm studying it fast. You know, I'm pull like literally. If I pull it up, boom, it just got pulled up. I'm kind of looking at that, studying it, and that's then as fast as I just scrolled their team. That's as fast as I just probably would have read that chart and go, okay, cool. I see the $4 area. If I want to put some lines in, I'll put some lines in. But that's it. You know, boom, done, over. I kind of see what I'm working with. And which was awesome this day when it was gapping up in pre-market, and Deck was calling it out with me, and we both wanted this three. This was, you know, what was this last year? 375 bounce. We called 375. We wanted this, called it out. We wanted it to drop, which is crazy. You know, it's $1.25 drop, really, right out the bat. You want to buy that? Heck yeah, I want to buy that. I mean, you could have bought here at 4 at this little sandwich wedge, small little, you know, where the close of the body up, you know, open of a body. But as you could see, it tried to hold there. You still would have been good, as you could see in the long run. We came back up quite a while. Of course, one of those slow and steady type movers that, you know, didn't just shoot up to 7 right away. But again, why did we want the 375 bounce? Let's show you why. Old highs, old resistance, right? Old resistance becomes new support. We see the $4 area. This is the dotted line. Go, here's $4. And I put the crosshairs right here on 376 just to make it easy and just nice and pretty for you to see. Look how many times we came right up to essentially 375 and failed. I mean, literally at least 1, 2, you know, we opened it that day, whatever it was. Let's just go through them all. 1, 2, 3, 4. We might as well just call this one 5. 6, 7, 8, 9. I'll give that one a 10. 11, 12, 13, 14 times. Close to, you know, over 10 for sure. Over 10 times We were in the range of getting over 375. Could not. Just couldn't. Just beat it on down. So we know when we come down to that, that's going to be some super strong support. And it came right down. Again, let's just go back to it. It came right down to it. Look, right to 375. Now, yes, a little probably a little bit tab, but there you go. That's why everyone bought it. That's why it got bought up there, and it said, let's go. Let's go. Deck was doing his let's goes. He needs to just play that song with it in the background because it is a pretty, get you going, motivated song with Lil Jon, Trick Daddy. Let's go. I mean, my gosh, are you kidding me? I would get goosebumps if you just started playing that in the background. But yes, love looking at these charts. Let's get to the next one here too. Let's get to the next one. Not to the next one, but kind of capping off that whole, the bottom of the run, where we got our bounce. Look where we ranged to. We know we have 885 in sight, right? But look where we actually ranged to. And I think the close of this candle, unfortunately, there's a study in the way there that runs up with it. I think it's a VWAP. But I think that's literally, I'm pretty sure it's the close of the candle. Or no, it was the open. That didn't open yet, duh. That's red. Open, spiked up, close, just boom, gave back gains. This is one of those ones. I think one day where Cap R defied its odds, which was what actually held its gains, and that's what we need. We need something like this, a Cap R to come through to push to new over literally all this resistance area and pushes and tests its 52-week high, but instead of doing this and being just you gave back all your gains, you hold your gains throughout the day. But again, look how we use this area and why I'd be like, okay, you have resistance here at 6. We get through 6, we'll have some, and I would have read this a little cleaner in here. There's probably some areas right in here. But again, we can see this clearly right there. Look what it did. Look at that perfectly. Not perfectly, of course, but almost, perfectly. It went right to that. Failed and came down. Beautiful. I mean, that again, while you read the past chart history, while you look at it daily, it's just crucial to use. Now let's look at it and use it in the pre-market terms. So using your now why we keep our pre-market on team. Here's why we keep our pre-market on. Can't stress that enough. Even me, even like we're in here in Power Hour, I'm gonna keep if it's in play, I'm gonna keep my pre-market on. If we've spiked above it, say we've spiked, just for example, we've spiked from 220 up to 280 here, and now this shot right here in market, right here at the opening bell, shoots straight through 3 and is at 4 and then 5. And we don't come back to this. There's no point because we're not around 280 no more. You see what I'm saying? We're flying at the 4 to 5 up to 6, 7 now, wherever we're at. We're well above this. No. There's no need. You don't need it. Now, all of a sudden, if it starts crashing and coming back down, maybe, again, though, only use pre-market when it's in play. Quick little lesson there. That's why we use it, though. And here's why we use it. Beautiful. And I was just yelling I remember in chat, this one was one of them, and when it was, because that's when it was hot. As you can see, last February, 26 is when it really started heating up. And right now, this time last year, it was just like every day, just hot. It's something about COVID, which was great. That's the reason why. It was just usually a COVID release. But regardless, 240 was the bounce area. Kept calling it. I was in chat earlier, which sometimes, like I said recently, I may not be here till about 30 minutes after the bell. Getting other stuff done, taking my time, watching. I'm here. I'm just not alerting. I'm not going to alert until, hey, here's what I want to alert about. And this morning I was alerting early, and somewhere in this area I'm alerting, hey, I want to pull back to this kind of like that 370. I want to pull back to where I find some support. Where you were in this case where you did bounce earlier, and I want to catch this bounce again. When that full volume comes in at the bell, if you come back down here, you're going to be pretty. But again, why we use the pre-market, and of course always looking at your past history. Always looking at your past history of where you've run to, where you've bounced at. Right here, 240, 245 areas, beautiful for a bounce. Beautiful. We know if we push back up, somewhere maybe around 275, but then again, we could run into, here's where your resistance areas are. And a prime example, again, I forgot I used this for just the same one. This could be multiple times. You're going to see many times where you're going to have a low of day area, and you're going to get a bounce there. So always remember that, where you may have a low of day area and you're going to get a bounce. And then, of course, that wasn't the best example, but always using that area of where you've bounced before, looking at your past chart history, where have you bounced at? And then, again, look where it bounces perfectly, right at the 240 area, and it moves. Again, intraday past history. Always looking at your chart. If it isn't a year, you want to go back a year, like that's how we start, right? We start with that year and then we start breaking it down from there, whether it's pre-market, after hours, maybe the day before. Now we're spiking. After we've spiked up, where are we going to have resistance to? Where are we going to have maybe some bounces at when we come back down once we've really pushed? Again, why we wouldn't use pre-market here. We've went from 14 up to, say, 16, 17, 20. There's no need. Not that I didn't do much in pre-market this morning, but there would be no need to really even see it anymore at this point, as you get what I'm trying to say. Again, old resistance high of day area turns into new support and bounces. That's why I don't know how often Deck looks for those on those pullback. It's when the time gets hot again, which we're going to have that team, the halt strategy, right? Where we see a stock really pull back to some good support. Or if like my halt strategy that I figured out and saw when it's really hot, it gaps up. It halts up at, say, 11.20, and then it gaps up to 11.60, and it flies up to $12, and it kind of tests a little above 12. At any point in time when you see a quick pullback, then 11.20, that old halt area up is going to be a good halt area for a bounce. So yes, we will find those areas again. And that's what I want to kind of get you geared up and ready for, and get ready to read that past chart history, because we're going to start seeing these crazy runs again. This is just one of those many examples where, say old high of day, you get your first bounce off of it when you get true volume. Even through your lunch hours, you can tell this is lunch hours, how we still get bounces that hold and continue to push back through the VWAP and continue to push throughout the day. We haven't really been getting that right recently. It's been a little bit slower. Totally understand it. Makes sense. But again, when the time gets a little warmer, a little bit hotter, when that volume and the mob starts moving back in, you're going to see it. That's what we want the most. Reading your past chart history is crucial. I can't go over it enough. And if there's any questions before we're done, just if there's any other examples y'all want me to do for any reading past chart history, I can go over those. But I want to make sure that everyone knows not only essentially how important it is to read past chart history, but how to read past chart history, as in that definitely is huge.